Got some new home sales out a few moments ago. Let's get to Rick Santelli. Morning, Rick.
Good morning, Carl. Indeed, these are January new home sales. Remember, there may be a weather effect. People are trying to decide if the California fires will have a future effect. But one thing I could tell you is it's a weak number. 657,000 seasonally adjusted annualized units. We're expecting a number about 30,000 higher. And last month had a huge revision from under 700,000 over to 734,000, which would have made it the strongest level since May of 23. Which means we're now down, 74,000? That's basically a 10% move lower. And do remember, if you look at bank rate 30-year fix for the month of January, its average was around 7.3%. So that's an issue as well. Existing home sales keep inventory generally tight, but there is a pipeline of new construction we need to keep an eye on. And to dig even further into this number, let's go to Diana Olick. Diana?
Well, Rick, you said it. This is all about mortgage rates. We saw rates go into the 7% range in January and keep moving higher. They started at 7.07% on the 30-year fixed in January 1st, moved to 7.26% by mid-month and stayed there all month. Of course, they've come down now, but these numbers are based on signed contracts. That is, people out shopping during the month of January, signing those contracts on newly built homes. And by the way, the price of a newly built home, $446,300 was the median in January. That is up 3.7% year over year. It's interesting because the builder sentiment numbers that we got last week, which showed a big drop in sentiment, also noted that builders were not doing as many incentives, not because they thought they would help them or they wouldn't help them. It's because they felt that there was such a great divide between those who could afford a new home and those who couldn't, that incentives really weren't going to move the needle on those who simply couldn't afford the home, because, again, that is a high median price. Supply has moved up to a 9-month supply. 6 is usually balanced between buyer and seller. So this drop, again, is largely due to what I think is mortgage rates moving well over 7% and concern in the economy. Rates, again, are down into the 6% range now, 6.8% as of yesterday. But I would note that consumer sentiment noted specifically that people were concerned about buying big-ticket items, especially homes, because they were concerned about the future of the economy, costs, inflation, et cetera. So the builders, they're not going to love this. Back to you, Sarah.
A lot of them are trading down. D.R. Horton down 2%. Lennar is down 1.5%. Makes sense. Diana, thank you. Diana Olick.